Maverick traders, welcome out to your market roundup March 7th, 2023. Lots to get to as the markets got hammered today. So a few different things as we look at the markets. First, the Dow down 1.7, S&P down 1.5, NASDAQ and Russell about 1% lower. Oil got hammered down 3.8 and gold took it on the chin at 1.8. So it was a bloodbath everywhere. Nowhere to hide. Advancers versus decliners, almost 80% of stocks declining, and the 50-day moving average has certainly swung bearish. Now we've got 60% of stocks trending lower and below their 50 MA. On the daily news, this is the big stuff today where Powell is telling the markets, look, higher rates are coming, higher for longer. We're going to keep rates elevated. We're going to have to fight inflation. It's probably going to be higher than what we had even anticipated a short time ago because of the data that's been coming in. And if you saw a big reaction anywhere, it was in the bond market. The 2-year Treasury yield spiked dramatically higher. It doesn't seem like that high, but it's a big move in the 2-year Treasury up to 2007 levels. And now you can get over 5% for a 2-year bond. So if we take a closer look at the S&P 500, you can see this progress that we've talked about where you've been grinding lower. And frankly, I thought we would bounce sooner than this, but we didn't really bounce from here. We just chopped and kind of filtered a little bit lower and then saw a good size bounce. So much so that you can kind of see in 2 days we rallied back what it took us 7 to decline. So it was a good sized rally. It came back up. If you were to measure from here to here, the size of the decline, it came back up to the 50% barrier of that decline. And we started to reverse yesterday. Today was a continuation of that. Now, this does not look like a sideways candle. This looks like a motive candle that is going to continue to push. Now, might we get a little choppiness? Sure. But I think the message tomorrow from Fed Chair Powell, he speaks again tomorrow, and it's going to be more of the same message. We've got to fight inflation. We've got to get things under control. It's higher for longer. I've used the analogy that the Fed already screwed up, right? They were slow to react, and they let inflation get out of control. And that's like a golfer that's standing there hitting a 100-yard shot, and they've got water in front of the pin. They just plunked one into the water. What's their next shot going to look like? Well, they have to err on the side of going deep. They have to err on the side of safety, even if it means landing in the rough behind. They have to play it safe because they can't put another one in the water, and they can't, have that type of risk. And that's where the Fed is. They screwed up previously. They don't have leeway. They don't have, kind of a saving grace where they can risk it or anything like that. They have to get this under control. If they screw up again and keep letting inflation rise and it becomes entrenched and so on, they got a bigger problem. So they're in the unenviable position of being the golfer that just hit it in the water, and now they have to hit it deep. And that means they already screwed up letting inflation get out of control. Now they have to keep rates higher, be more hawkish, more aggressive, and that's just the way it is. That's the world we have. So forget about the market you want. That's the one we have. So I think, again, the path of least resistance is lower. I was hoping and thinking that we would get a good-sized bounce. This market has given you ample opportunity, and I thought, it'll give us a bounce if we wait for it. It's choppy enough. There's enough two-sided market. We'll get a bounce, and that's where you want to get short. I'm still of the mindset, as I have been, that on that bounce, you want to short the market and you want to play it lower. Look at the NASDAQ. Again, we got the bounce kind of at the top end of the range. The NASDAQ's held up better than other things, but ultimately I would still expect that we're going to continue to move lower. As we look at the heat map, it is bright red. Financials certainly got hit. Everything got hit. Healthcare is deeply in the red. Energy over here, real estate. I mean, there's nowhere really to hide. A couple of selective names. You could say this little segment right here of airlines, there's a bit of green there, but ultimately it was just everything sold off. So the market's back below the 20, back below the 50. Slope is sideways, but ultimately I'm of the opinion that we're still going to test lower prices, that this year, this is really the year has played out much the way I expected, which is we rally early. The pessimism at the end of last year was extreme, put to call ratios at all-time highs and so on, like we've talked about previously. So that was a good bullish opportunity. Lately, I've been leaning bearish. I thought, well, we'll get a rally in the short term, but you want to short into that. And today was just more of the same. So I still think the path of least resistance is down. Let's take a look at a few names here. 3 on the bull, 3 on the bear. Apple, if I wanted to buy something, I would have to consider Apple. We tested the prior highs. And I like to look for this dynamic, which is you've kind of got the rounded shape and then this little mini pullback. Now, I don't know if Apple will hang in here and form a little doji, and maybe the NASDAQ continues to outperform, but it should hold up better than most. It should hold up better than the majority of stocks and sectors and so forth, so it's worth consideration. Again, I'm more in the bearish camp, so I'm not super excited to buy much of anything. EQT, which is in the oil, well, more so in the natural gas space, but bearish to bullish reversal. Now, I don't trust upside breakouts when you have a lot of overhead supply, right? You've got dead bodies here and they want their money back, but I will be interested in buying the dips, and I think this is one where it should outperform. And I kind of like EQT because it's not correlated to the markets. And I can envision a scenario where natural gas and energy and some of these things trade better than the S&P 500. Cheniere Energy, same type of dynamic, little different look. 2050 crossover. The breakout was it was lackluster, but now we're buying on the dip. Bigger volume on the way up, lighter volumes on the way down, and testing that 20-period moving average. Notice how it bounced. Most everything finished on their lows or near their lows today, and a stock like this in the energy space bounced off of those lows. So we look for little pieces of criteria like that show us relative strength and show us maybe an area that's worth a look. On the bearish side, I could have a lot of names here that look interesting to me. Adobe's one where I personally entered a bearish position today. Again, inversely, you kind of have the gap fill, the 2050 rolling over, a series of lower highs and lower lows should still be in place, and that means the next move should be another leg to the downside. In phase energy. So I put this one in there. Again, I'm a little bit more optimistic on energy than most things out there, but if you wanted to kind of play it both ways, I prefer buying LNG or EQT and then shorting in phase. So if you're of the mindset that you want to have a long and a short in energy, I would probably pair it with something like ENPH on the downside. And then last but not least, Lowe's, big bearish engulfing formation. Again, the trend is lower, lower highs, lower lows, lower highs should be in place. And again, at least choppy, if not lower prices coming up, seems to be the path of least resistance. As we look at the markets, we've talked about that we're in a bear market. We've had that ABC correction. Now we got that bear market bounce that I had been talking about the last 2 weeks. We finally got it. The markets were just choppy and kind of grinding lower. And then the last couple of days, we had that big bounce to start this week, and the lower swing high has now pivoted. So I'm just pretty bearish overall. We have Fed Chair Powell testifying on Wednesday, non-farm payrolls, those jobs numbers coming out on Friday, and then on the earnings side, things are winding down. Remember, the big period of time for earnings will be coming up in mid-April. We still have DocuSign, JD, Oracle, MongoDB. There's a few companies reporting, but for the most part, earnings are kind of winding down overall. Hope you've enjoyed this market roundup. Have a great rest of your day, and we will see you next time. Goodbye, everyone.